Well, Google and Tesla just reported earnings, and they might be the catalyst for pushing the market over the edge, and not in the way that we want it to go right before election season. Let's get started with what the heck just happened. First of all, sort of an intro here. The expectation and concern was that we might hear something about slower artificial intelligence revenues, slower growth combined with higher valuations and the election. And well, that's kind of what we got. Google confirmed a slowdown or more patience being required before seeing AI profitability. Keep in mind, quality of their products is increasing and the output of their AI innovation is increasing. We'll talk more about that in just a moment. And Tesla complained that NVIDIA chip demand is so high that they're basically forced to make their own Dojo chips, which once again reiterates that Dojo is more of a side project. Even though Elon does think Dojo will be competitive at one point with NVIDIA, they still need their NVIDIA chips. And despite all of this, NVIDIA stock is down about 1.5% in the post-market. Now, that could change and fluctuate rapidly, and it seems like demand should still be pretty dang well there for NVIDIA, especially with what we heard from Tesla. But the question now is, what are the details of what happened here, and could this lead to an AI sell-off? I'll start broadly. Yes, this earnings season could lead to a market smaller kind of correction before the election, but I've had that thesis for about a week and a half to 2 weeks now, and what I've been doing is I've been trimming positions. In my course member live streams, I've been explaining my positioning. I'm about a 5 out of 10 on the bull-bear scale, and I've increased the cash positioning in the fund that I manage to up to about 30%. It's somewhere between 24 and 30%. We also trimmed our Tesla exposure by more than 50% going into these earnings. And we talked to course members this morning about the concerns going into these earnings. Some of those concerns that we talked about going into this earnings were that we kind of already had a little bit of a short squeeze over the last period where Tesla ran up to 265. We also talked about how, it's right here. This is kind of like just slap together some notes. This was our course member live stream this morning. And we talked about Robotaxi, the delay killing momentum. Robotaxi event likely to be buy the rumor, sell the news. Going to be years before Robotaxi is commercially viable. Euphoric pricing implies that these are all right around the corner, but they're not. And today for the stock, what you really need is even better margin in Q1. A lot of that, unfortunately, we saw in the earnings came from regulatory credits. A return to free cash flow, though look at this, I even wrote the market's pricing in $1.9 billion in free cash flow, and I wrote, yikes, that's a huge ask. And sure enough, we missed on that free cash flow. We have to beat market enthusiasm to justify maintenance of 250, which I didn't think it was going to happen. And Elon will be drilled about Robotaxi. Sure enough, this is what happened. And this isn't the place for announcements. Sure enough, that's exactly what he said. Although we did get a few insights, none of them enough to actually create any kind of sustained euphoria. And therefore, I wrote, can it rally? Of course, but I lean towards not. And that's why I went in trimming going into this earnings release. So what did we hear? Well, let's get into some of the details. Quick shout out, we got prices going up on the courses on building your wealth soon, so check those out at meetkevin.com. Bundle coupons, email us at staff@meetkevin.com. We've got a mastermind at meetkevin.com/mastermind. That's really popular. We've got small groups and private one-on-one masterminds now. So check those out at meetkevin.com/mastermind. And architect and structural engineers. If you are an architect or a structural engineer and you want to relocate to California, we'll pay your relocation, pay you a great salary. Even if you're both, gosh, but we'd hire separately as well. Like a licensed architect, licensed engineer will help you get licensed out here in California. We need you. Send us a jobs request, send us a resume and sort of a 60-second pitch on you to jobs@meetkevin.com. Structural engineer and architect. Could be two separate people. All right, folks, let's get into it. Tesla regulatory credits increased 3x year over year, 2x sequentially from Q1 all the way up to $890 million. This is remarkable, and it's in part because what you're seeing is a reduction in, well, frankly, other OEMs competing for these regulatory credits as they're leaning away from, well, quite frankly, you're leaning away from producing electric vehicles. Interest rate buy-downs helped drive the production and delivery numbers that we saw in Q2, but I worry that this is a little bit of what I call a good kitchen sink quarter. In other words, it happened to be the best quarter for Elon to have his stock comp plan vote. And so what did we get in that quarter? CapEx reduction, now it's ramping again in Q3. Production reduction, now it's ramping again in Q3. Interest rate buy-downs, and those are also here in Q3, which is lowering the average selling price of these vehicles. Your average selling price right now is down to about $44,774. And it does look like the average selling price is reflective of the interest rate buy-downs. So those interest rate buy-downs are coming off that top line, apparently. Anyway, you've got a lot of expenses that are still coming later this year. You do have a lot of cash. You've got over $16 billion of free cash. Now, about $2.5 billion of that did come from debt that they just raised. But you definitely have expenses that are going to grow in the rest of the year. They still, and they reiterated, they still expect to spend $10 billion in CapEx. And given that they slowed down their spending in Q2, it means we got a lot of spending ahead of us. Supercharger growth slowed to just 3.5% sequentially, which annualizes to about 14%, which is down about 10 percentage points year over year. This isn't great. This might lead to more congestion as Tesla invites other charging customers to use Tesla's supercharging network. So you would actually expect the supercharger network to grow faster, not slower. Not seeing that at the moment. The Tesla did start delaying some of the rollout to some of these other third-party OEMs, and you did end up seeing some of the Tesla supercharging team rehired. Tesla's still focused on cost reductions. They were actually pinged on this. They're like, why are you focusing on cost reductions if you're trying to grow more? The same question came up about Giga Mexico, which I actually thought the answer was pretty interesting about this. We knew that Giga Mexico was on pause, but why was interesting. It was previously on pause because macro is concerning. Now it's on pause because, well, if we manufacture more outside the United States, like in Mexico, we could get screwed by tariffs via a President Trump administration, which is also interesting because we have essentially Elon himself has confirmed that, yes, he is donating about $45 million to a super PAC that is his, which is supporting Donald Trump for president. Anyway, margin beat at 18%, but again, that margin growth mostly moved because of that expansion in regulatory credits, so not great. Increased deliveries from Shanghai, that's good. Audible's now available in the car, fine. More affordable options remain on track for 2025, and they are expected to be built on the same manufacturing lines as current vehicles. Only the robotaxi is supposed to use the unboxed method of manufacturing. This is where you're not going down an assembly line, but rather multiple parts of the vehicle are being assembled by, let's say, Optimus robots at the same time. Energy may continue to grow at a faster pace than cars. That's exactly what we're seeing right here. You did get a profit miss, EPS miss. Again, this is the fourth straight time in a row. Tesla is also likely to go negative year over year on vehicle deliveries. Elon on the conference call. He says competing electric vehicles haven't done well. They do expect, again, that more affordable model to begin production in the first half of next year. And it sounds like one of the reasons they delayed the robotaxi event to 10/10, October 10th, which is a momentum buzzkill, which isn't great for the stock, is because they want to introduce other models at that moment as well, which could be the lower cost model. And we also got a hint on the Roadster here, that the Roadster announcement might be coming for production next year, so you could see something at the Robotaxi event as well for the Roadster, higher-end vehicle. Now, I personally have what I call I call it my, this is inspired by Rust, it's a video game, sorry. I call it my 2x2 foundation for investing in stocks. And the 2x2 foundation is built on 4 premises: valuation, pricing power, sentiment and momentum, and bankruptcy risk. Tesla does not have bankruptcy risk. However, Tesla's valuation is very high. Before this earnings report, we were sitting at a 3.1 peg for the next 4 years of growth at 32% EPS growth priced in. That's expensive. That's because the PE ratio right now sits for this forward year at 100. Now, obviously, you're going to have about a 7% discount to that now, given that the stock is falling 7%. The valuation is very high for a manufacturing company, though, which should be closer to about a 1.67 peg. the best pricing power in the industry, though pricing power in general for autos is substantially weaker than pricing power at other companies. Sentiment and momentum just got buzzkilled, and again, I don't think there's bankruptcy risk here. So you're really missing two of these foundations, right? The valuation is high, they do have in-class pricing power, they don't have bankruptcy risk, but sentiment and momentum really started dying after that robotaxi event got killed. And unfortunately, this earnings call is probably just going to accelerate sentiment in the negative direction, which isn't great. So near-term pricing, not super excited about it. Again, there's a reason why I reduced my exposure to it by over 50% leading into this earnings report. And we've been talking about this and sending alerts about this in the course member live streams and talking about this as well. But anyway, continuing on. Elon believes we have the scale and production capabilities to be the most efficient EV producer in the world, and that will be really useful for Optimus production. I just want to be clear, as much as I love the whole idea of robotaxi, and as Elon puts it, the Airbnb on wheels, you know, introduce your car to the fleet. We've heard all this crap before. We're not there yet. And I understand the market can get really enthusiastic about pre-pricing in these things, but until we actually see revenue, it's almost impossible to price it in and to stand on that valuation because we haven't gotten to full self-driving unsupervised yet. We're still trying to get to, you know, more than a few miles between interventions. And it's probably going to take years before we get there. This doesn't mean I'm bearish long-term Tesla, but short-term, it's not good. You don't want to price in robotaxi. You don't want to price in Optimus in the short term. Yes, Optimus was doing something productive. They alluded to initially in their press deck release, and then in their slide deck release. It's funny because I joked, and you can fact check me on this. I joked about it live. I'm like, what, are they going to have the Optimus putting batteries in a box? Because they're like, oh yeah, we have the Optimus working with batteries. And, well, I'll just let you look on screen and yeah. Anyway, 12.5 release for FSD should be a big shift. Now we're going to merge the highway and city stack. That's great. This idea about other OEMs using FSD has once again resurfaced in the earnings call. I'm tired of hearing this. They literally say, yeah, other OEMs have expressed interest. They've been saying it for over a freaking year now. I'm overhearing it. It ain't happening. Especially when you have the CEO at Ford going, we're going to make money with software. They want their own crap. And guess who's going to give them their own crap? NVIDIA. You could literally just take the NVIDIA drive platform and plug it into your garbage at Ford and build your own software rather than paying Tesla for it. I'm not saying it's going to be close, but in 5 years, they're all going to have their own FSD, and they're all going to use their own crap. This OEM stuff, licensing Tesla FSD, I put a 1% chance on it happening. And if it happens, by all means, I will eat my words. I was wrong about Google, mind you, and we're going to talk about Google in just a moment. They really impressed, so I absolutely can be wrong, and I guarantee you I will be wrong in the future again. Just saying, I'm highly confident this whole OEM licensing thing is bullshit. Sorry. Anyway, Optimus is already starting to perform whatever, this is nonsense. Eventually, yes, he expects that Optimus will be able to perform tasks inside of the facility at Tesla for Tesla, and that they'll have maybe 1,000 Optimus robots doing things practically inside the facility. So that'll be Optimus version 1, and they expect to get to Optimus version 2 in 2026, which maybe third parties can then license, rent, or buy. Long-term, Optimus achieves ARK's valuation several times over, says Elon Musk, but again, that implies that you don't have substantial robot competition, which you will also have a substantial amount of robot competition. Anyway, when do you expect the first robotaxi ride? The answer was, depends when we can get to unsupervised FSD. So it doesn't actually sound like robotaxi is anything other than just, here's a car that uses FSD. So if you really want to know how well FSD is going, you just need to own a Tesla and then watch the FSD upgrades. Now, I want to be clear. FSD is really good. When I drive, I use it all of the time. So I'm a big fan of it, and it's gotten better. You know, some of the first versions of 12, like 12.1, 2, 3, weren't that great. 12.4 is fantastic. I absolutely love it. So don't get me wrong, it's great. Is it going to be driving itself anytime soon? No. Next, we've got this potential Osborne effect Elon was talking about, which is where people cancel their current orders because a new product is announced, and that's why he doesn't want to announce any kind of new product yet. Sure. Okay, Elon. Let's see here. FSD in Europe is well behind, working on approvals to get supervised FSD in Europe and China, hopefully by the end of the year. In the future, you'll be able to open up your app and we'll send a car to come pick you up. I understand this ARC thesis that, you know, you're going to get 25 cents per robotaxi mile or whatever. I also think that is broadly bull SH9T. The reason for that is I think if literally everyone who owned a Tesla in every city submitted their car to the robotaxi network when they weren't using it, the value of a taxi will plummet. The cost will compress so frickin' rapidly, you'll barely make a dime over your cost. Vehicle depreciation, charging costs, that is going to compress instantaneously. Now, that'll destroy Uber and Lyft, but I think you still got a few years for that. All right. Google. So, okay, Google I actually have to say I'm really impressed with. Oh, yeah, anyway, so short-term bearish Tesla. Longer term, I like it, but I'd like it cheaper. So yeah, you really also need to get back over 230. Otherwise, on a technical basis, you're going to probably go back under 200 for Tesla. Anyway, it's something I've been warning about for a few weeks in the course member live streams as well. People keep asking me like, oh, what's going on with Tesla? I go, it's going to go down like Q3, Q4. By then it's going to go down. It might happen a little sooner than we thought. This isn't me being bearish. I'm just trying to be realistic. And then you go back and get the receipts. Anyway, when you join those courses, mind you, you get all my course member live streams going all the way back to like 2017. So you just pick my brain all throughout the evolution. It's kind of cool. Google wants to bring AI to everyone. You know, they're trying to do a very similar to Apple thing. It's like, oh, what did I eat in that restaurant at Paris last year? I don't know why that's super functional, but whatever. I guess it's cool. It sounds very Apple-esque. What they're finding is that they're able to increase efficiency for advertisements. For example, their PMax product, which is Performance Max, it's what you could set your ad account to. It converts 25% better than the non-PMax version. That's AI. PMax uses Google's AI. So what you're finding is AI is just making products better. Quality of products is going up. Costs are going down within companies. But they're not really driving incremental revenues. They're not necessarily increasing the revenue line. They're just decreasing costs and making all products better, like more functional and useful for end users, which is a good thing. Like net, AI is great, but is it really going to be this revenue windfall everybody's expecting? Probably not in the very near term. And at some point, we don't know when that is. That could be, quarters from now. It could be years from now. At some point, the costs of AI chips will collapse because the AI infrastructure will be built out. YouTube, second most watched after Disney for streaming. YouTube's benefiting from connected TV. YouTube benefits from more advertisers as well. Search remained the largest contributor to revenue growth, retail search specifically. And they are really kicking butt because they're integrating Gemini right into Google. I actually think this was well played. I was wrong on this. I thought people would just use AI search apps as opposed to Google and it would replace it. But frankly, Google 4D chessed this and just basically built the AI search results right into search. And now they put ads above and below it, and they're expecting to have product ads within the AI results. Brilliant. Absolutely brilliant. Hands down, loved what I heard from Google. Loved what I'm seeing from Google. I'm a Google Cloud user. All my companies use Google. We're big fans. 32% operating margins. YouTube subscription revenues are growing. Healthy watch time. Much slower pace of hiring with a slight pace of growth going into Q3. This is great. That's anti-recessionary. You don't want to hear more layoffs. They're already negative like 2,000. It's about 1% smaller workforce than what you had year over year, and you are growing. So that's good, but it shows you're kind of on a little bit of a teeter there, right? Planning to invest $5 billion into Waymo's self-driving car unit. They're committed to privacy, but they're not getting rid of cookies yet, which I'm not really sure how that is going to affect Trade Desk, because getting rid of cookies was kind of what Trade Desk was really excited about with UID 2. And this is their sort of solution to cookies. But then again, maybe you can get better data if you do have access to cookies. So it could just be a net neutral there for Trade Desk. So, but anyway, yeah, it seemed like markets reacted pretty negatively to this idea that you weren't going to get more revenue from AI. Endphase, despite a 19.5% miss on microinverter shipments, the stock is remarkably up 4.5% in afters. I think people were expecting the worst. They were expecting a big collapse, so hence the stock is up. And they indicated that customer demand is up 5% in Q2, that 85% of Q3 shipments are already booked. Inventory is normalizing, the sales channel, and sales outside of California. California is flat. Sales are up 7% in Q2 outside of California. So, for me, if I'm looking for buy the dip, maybe it's Endphase, or honestly, it's just waiting, because I think there's a chance going into this election, you're going to want a little bit of a cash buffer. And that's why I've been increasing. Like, I put my money where my mouth is. I can't advertise my fund in here. I'm not trying to advertise my fund in here. I use it it's my own sort of tool. I love it. I think it's fantastic. But I just put my money where my mouth is there. So that's sort of a long-term vehicle. And when I see opportunities for short-term balancing, I do that. So I like building cash. And then when the market dips, bang. I personally think broadly, not personalized advice for folks, now might be an opportunity for some cash building. So with that said, let's go ahead and pull up the sticks here. Tesla now down 7.91%. I want you to see we lost the 250 support. This was a really critical line. We got rejected there mostly throughout the day. Was able to also make some profitable, well, actually we had one profitable, I only made one trade today. But anyway, profitable trade today. If you want all my short-term or long-term buy-sell alerts, can't guarantee you'll make money, but you'll get all my perspective. Make sure you join the Stocks and Psychology Money Group. Any of the courses on building your wealth will give you access to the course member live streams for life, including all the TA we talk about, short-term, long-term alerts, the Discord community, you name it. Tesla's almost down 8% here. The next support level right now is sitting about 225. And if we lose these 220s, unfortunately, we're going to be back to the 195s. So watch these levels here at Tesla. NVIDIA down after that Google earnings call, and NASDAQ futures also down 0.5%. Bitcoin is sitting roughly around the levels that we saw when Biden resigned. I think there could also be some near-term risk-offness in the Qs that spills over to Bitcoin. Google negative about 1.76, 1.8. So not too much of a big move here on Google. However, it is getting rejected by that 194 line. You can pretty much see that perfect rejection here. Next stop is 152. If we do start a downtrend, I don't think Google's earnings were bad enough to really support that kind of downtrend. You'd really need a larger market correction, but we might end up getting that. So there you go. Thank you so very much for watching. Really appreciate y'all. Remember, we've got that amazing mastermind. It could be one-on-one in person or small group with C-level executives from companies who are in it, business owners, real estate investors, hoteliers, you name it. You want to be in it. Check it out at meetkevin.com/mastermind. That is a higher ticket option. The next, the best option I think everybody should be a part of are those course member live streams and what you get in those courses on building your wealth at meetkevin.com.
These things that you told us here, I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.